And this is Bloomberg Technology. Coming up, a Bloomberg scoop. China fortifies its Great Firewall in its latest move to tighten online censorship. We dig deep into the new crackdown. Plus, Tesla's Model 3 production goes into overdrive. We will map the automaker's road ahead in a quest to conquer the affordable electric car market. And two-time NBA champion and emerging investor Andre Iguodala's tech crossover, how the one-time Golden State Warriors MVP is making a big play in Silicon Valley. First, to our lead and a Bloomberg scoop. China is cracking down on what its citizens can find on the web. The Chinese government has ordered the three major telecom carriers, including China Mobile, China Unicom, and China Telecom, to block individual access to virtual private networks by February 1st. Blocking VPNs essentially shuts down a major window to the global internet, which helps users bypass restrictions. Thousands of websites are currently blocked in China, including the New York Times, Facebook, the BBC, Twitter, and some Google sites, including YouTube. Bloomberg's Peter Elstrom, our managing editor for Asia Tech, is normally based in Tokyo but joins us from New York today. So, Peter, what exactly do we know?
Well, so China has been playing this game of cat and mouse with virtual private networks for many years, where for a while people use a certain VPN and it works pretty effectively to be able to get access to Facebook, Twitter, and other websites that are normally blocked. But then the Chinese government will crack down. So what we're seeing now is a much more comprehensive approach where the government is going to the three major telecom companies, all state-backed, and asking them to block all VPN services accessing the outside world for individuals. So that's a pretty big step for them to try to tighten up on the censorship around their internet and try to block people from getting outside of China and then access to these websites that they want to be blocked.
I've played that same cat and mouse game, having lived in China, having traveled to China. You use a VPN for a while, and then suddenly it stops working, and then you go on to use another VPN. So my question is, in practice, how is this actually going to be different from the status quo?
Well, I think conventional wisdom has been that China is not going to be able to keep this up, that eventually China is going to have to open up its internet. Other people are going to be able to get access, and Chinese people will be able to get access to websites outside of the country. What we're seeing now is really a serious tightening of that. As you mentioned, expats certainly do this all the time to be able to get access to Twitter or Google or Gmail or Google Maps, for that matter. You sort of need it. And it's not just expats, it's other people too who want to get access to all the information that's blocked on these websites, including the New York Times and, of course, Bloomberg.com, too. So we're seeing a much more serious crackdown. The president of the country, Xi Jinping, has talked about cyber sovereignty and how he wants to maintain control over China's internet. It's a pretty radical move, and it looks like he is determined to keep that kind of control. That, of course, opens up tons of opportunities for Chinese companies, because U.S. companies and many of the most powerful American internet companies are not able to operate in the country.
So what does it mean for multinational companies that operate in China? Because they've been operating in this legal gray area as well, where they can use VPNs, but only internally. Would this new rule affect them?
Well, it's important to distinguish. This rule, according to what the sources have told us, again, this is based on people familiar. There has not been an official announcement at this point, but the restrictions are going to be individuals' use of VPN, not the corporate use of VPN, which can be for many different reasons. But in terms of the individuals, what you're going to see is you're going to see many of the individuals inside of China who have been using services like Twitter, Facebook, et cetera, are not going to be able to access those sites. So they're going to lose thousands of users on many of these websites. So that's a significant deal. It's not clear what kind of opportunities those companies are going to have beyond this.
What does this mean, or what could this mean for the companies that have been blocked all this time, whether it's Facebook or Twitter? The conversation has been for the last several years, will they ever be unblocked? Now this seems to be a massive step in the opposite direction.
Well, these companies, including Facebook, as you mentioned, have been very determined to get into China in some sort of way. Google was in China for a while and then decided to pull out because it didn't want to comply with the censorship there. It will put more pressure on them to find new ways around this. I'm sure the people at Facebook and Twitter, et cetera, are looking for alternatives. And the creativity of people inside of China to get around this great firewall has been pretty amazing over the years. This is a pretty serious step in tightening this up, but there may be alternative ways that they'll be able to discover at some point in the future to get around the firewall.
What might it mean for a company like Airbnb, which, as we know, has hired a China-based CEO to focus on expanding in China, where other companies, like all the ones we've mentioned, and Uber, have tried and failed?
Well, Airbnb, of course, runs quite a different business. It's not really information or a media business in any sense, so they may not face the same kind of restrictions. The market has been open to Western companies to come in to a certain respect. But the Chinese technology companies have been very strong. Airbnb in particular is competing with a couple of local players that are very powerful. We may see a repeat of the efforts for American e-commerce companies to compete with Alibaba, for example, where Alibaba ended up winning and really taking the market. You've got many strong players, so it will be kind of a case-by-case basis.
All right, Peter Elstrom, our Bloomberg Tech Managing Editor in New York today. Thanks so much, Peter, for that update. Now, in deal news out of China, Stripe struck a deal with Alipay and WeChat to allow online merchants that use the company's payment processing technology to receive money from users of these two massive Chinese apps. Alipay and WeChat each boast about 500 million users and dominate the digital payment space in China, making up about 90% of market share. We'll have more details on this deal later in the show. Coming up, a Bitcoin software battle is brewing that could send shock waves through the $41 billion market. We'll bring you all the details next. And Bloomberg Technology is live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. President Trump set Twitter on fire over the weekend when he proposed a partnership with Russia on cybersecurity. The president tweeted, "Putin and I discussed forming an impenetrable cybersecurity unit so that election hacking and many other negative things will be guarded and safe." After considerable backlash, including from lawmakers from his own party, Trump went on to tweet he didn't think such a thing could actually happen. The tweets come after Trump's meeting with Russian President Vladimir Putin at the G20 summit in Hamburg, Germany. This after months of controversy over Russian meddling in the 2016 U.S. election, and the latest revelation that his son Donald Trump Jr. met with a Russian lawyer in the hopes of receiving information about opponent Hillary Clinton. Now, a major battle is brewing in the Bitcoin market. After 2 years of largely behind-the-scenes bickering, rival computer whizzes are now poised to adopt 2 competing software updates at the end of the month. This has raised the possibility that Bitcoin will split in 2, an unprecedented event that would send shockwaves through this $41 billion market. Camilla Russo covers cryptocurrencies for Bloomberg News and joins us now from New York. So, Camilla, Bloomberg News has a headline referring to this as a possible civil war in the Bitcoin market. Could this actually happen? Could the currency split in 2?
Yeah, it's actually a very real risk that it's one of the major events in the cryptocurrency world this year, and everyone should be really watching it because it could mean that Bitcoin splits in 2. And there's 2 rival camps, and the miners and the developers. Right now, there seems to be some consensus forming on one of the proposals to help Bitcoin scale, but the risk is still there.
How did we get here?
Well, it's basically Bitcoin's popularity's fault that we're here. The increasing popularity of Bitcoin meant that there is increasing activity, more and more transactions, and that increased fees and also the transaction times. So that has different camps planning on how to help Bitcoin scale and lower transaction times and fees, which is what Bitcoin initially was set to come help reduce. So the main camps here are the miners and the developers. the miners proposed to increase the block size on the Bitcoin blockchain, while the developers wanted to have some of the blockchain functionality separated from the actual transaction processing.
Okay.
So right now there was a compromise that had the developers' proposal, which is known as SegWit, and that proposal agreed to increase the block size further down the line, like the miners wanted.
Well, certainly a fascinating story. We'll continue to follow it. I know you will keep us updated. Camilla Russo with Bloomberg News. Thanks so much. Coming up, the rubber has hit the road for Tesla's new Model 3. The outlook for the automaker's latest offering and its ambitious production plans next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. How do you walk that line
when you're in the middle of a crisis situation?
It's really all about enabling people. Technology needs to serve everyone.
But at the end of the day, it's all about emotional decision.
I think there's huge innovation left in music.
The hallmark of a truly great leader is that great is never great enough.
For us, it's not about being first, it's about being the best.
Tesla is ramping up production of the Model 3. This after the first car rolled off the line just last week. The automaker already has $500 million in deposits for the $35,000 electric car. If Tesla achieves all of CEO Elon Musk's targets, it'll build more battery-powered cars next year than all of the world's car makers combined in 2016. Earlier, I spoke with Bloomberg's Caroline Hyde out of London and started by asking about the outlook for Tesla filling all of these orders. Take a listen.
Key question, and $500 million means everyone paying about $1,000. That's 500,000 people that have lined up for this particular Model 3. And what we do know about this car is the ramp up is enormous. So far, well, Elon Musk has got his. He's got his serial 001 car that rolled off this weekend. But now the really ambition is huge. They've got to deliver, well, 30 in the course of July. That's for the special party on July the 28th. But then they want to be hitting numbers such as 20,000 cars per month by December. They want a fourfold increase by next year. Notably, the amount of cars they want to make in 2018 will be more than were made in terms of electric vehicles worldwide by any automaker in 2016. So the key is, can they deliver? Because there's certainly demand there.
Elon Musk has set an aggressive production schedule. Is he setting the bar too high?
I think this is why we're seeing a sudden tumbling in the market capitalization. We're seeing queries coming thick and fast from analysts as to whether they can achieve this sort of ramp up at this sort of pace. Certainly, the numbers are rather eye-watering if you think that they are going to be creating more electric vehicles in 2018 than the entire globe did in 2016. And they're going to be the outperformer. And interestingly, Bloomberg Intelligence does think that Tesla really can be the winner here of a ramp up in demand for electric vehicles. And they will manage to jump over GM, which currently holds the title as the biggest maker of electric vehicles. They think that they can surpass them by 2021. But these are lofty aims. And Elon Musk, we know, does set his own bar pretty high. So he's going to get them out thick and fast. And with the fact that we saw market cap erode some $8 billion alone last week, the fact that you've got competition coming from the likes of Volvo in Europe saying they want to go fully into electric vehicles. We've got Volkswagen in Germany saying they can take Tesla on in the next few years. It really does need to start showing that it can make these mass market vehicles quickly and without reducing the quality.
On the other hand, he's also downplayed some of the features of the Model 3. What do you make of that?
I think that's interesting, and I think that's, first of all, trying to set it apart from the more luxurious and more margin-rich versions that are, of course, the Model S and the Model X, because there has been this worry, came out last week with the numbers of the sales for second quarter, that, well, perhaps they're plateauing. He didn't want people to think that the Model 3 were as good as these particularly luxurious models. He wants to realize that the Model 3 reflects the $35,000 price point. But also, he's tried to make his life a little bit easier. He doesn't want to see the same sort of problems they had with the Model X, for example, when that rolled off and suddenly you had issues perhaps with misaligned body panels, you had software glitches, you had issues with the falcon wing doors, those crazy doors that managed to avoid cars nearby by opening like a bird. And all of these things did mean that Model X didn't get all the best write-up. They're aware of that, even though now it's, what, the 4th biggest selling SUV in the United States. But they want to make it kind of simple just so that they can make themselves reach some of these key targets.
Now, we have to talk about demand in China. Bloomberg Intelligence pointed out that when Hong Kong scrapped a tax break on electric cars, that new registrations went down to zero. Zero. What's happening with that?
Unbelievable. We did see a ramp up prior to the tax credit coming away, and we did see, therefore, orders come thick and fast. But this is notable considering that China has the biggest demand globally for electric vehicles. They're well ahead of the United States. They're even in front of Europe, which is another key player when it comes to demand for electric vehicles. And the fact that just this one tax break alone meant that you see a complete erosion of demand does say something. And this is, as you say, something Bloomberg Intelligence has highlighted. The Wall Street Journal has gone big on it today. And therefore, it's notable when you do have perhaps, what, of the $7 billion of revenue that they break in for Tesla each year, about 15% is predicated on China. So this doesn't bode well. It doesn't bode well for other countries that offer tax breaks as well. The United States does for car manufacturers that haven't made 200,000 of their certain vehicles in time. Many a country, many a geography has these sorts of tax incentives, but it's worth noting that Hong Kong had been one of the most generous. So whether or not this perhaps is a warning signal for other countries as and when they perhaps can take away their subsidies, or indeed this is just a one-off and we'll start to see demand pick up once again from Hong Kong, time will tell.
That was Bloomberg's Caroline Hyde there. Now, a stock we continue to watch, Snap shares falling below their IPO price to $16.95 a piece just before the New York Stock Exchange closed Monday. This comes as investors continue to question the company's ability to grow as fast as initially expected, and after wider declines in tech stocks worldwide. So, how can the company regain value? We are joined now by our Bloomberg IPO reporter, Alex Barinka. So, what is behind the pressure on the stock, Alex?
People are not buying into this story. When Snap went out on March 1st and sold its shares, it promised growth. It promised innovative products within its disappearing photo app, but it didn't tell investors what exactly it intended to roll out. You've seen incremental moves from them. They bought Zenly earlier last month to add mapping skills in there. They've minted deals with the likes of Time Warner, who's spending $100 million on their ads and for video production on Snap over the next 2 years. But investors have not been convinced. I mean, the thing that I continue to go back to is this constant fight between what Snap has to offer and what the likes of Facebook and its Instagram has to offer. And when you look at the numbers, in June, Instagram came out and said their Stories product, which is very similar to Snapchat Stories, Instagram Stories has 250 million daily active users. Snapchat as a whole has just 166 million daily active users. So when you think about where the growth is coming from, if the incremental changes within the app itself are not enough to convince investors, which they haven't been, then you've got to win on user growth, and Snap hasn't been winning the battle there either.
And what about international growth, where Snap is seriously lagging?
They are, and a lot of that has to do with the fact that a lot of international smartphone users are on the Android platform, and that's a platform that Snap had trouble with, especially at the end of 2016. They say that they're rolling out changes in those areas, but again, it's another front where they seem to be losing out to the competition. And when you're constantly fighting for where to share your short videos, your disappearing videos, and now now you have the big competitor like Facebook and its Instagram on your heels, basically matching Snap step for step. Again, investors are not convinced that it warrants a valuation upwards of $20 billion, which is where, you know, frankly, at a stock that priced at 17 in its IPO, you'd expect that they would be valued at more than that, and not at the close that we saw today, just under that $17 price.
Quickly, Alex, has Snap's performance had a chilling effect on other tech IPOs?
For the big deals, especially the other tech companies that are thinking about going are really thinking about what is their proper valuation when they get out the door. Whether it's Snap or Blue Apron, which has fallen below its IPO price after listing in the past couple of weeks, these are two right now that if you are a company and a management team and you're approaching that go public point, you are talking very closely with your investors to decide, how do we price this deal? Are we worth as much as we were valued in the private markets? And what do we consider pushing out to the public markets going forward?
So what are the companies in the pipeline for the second half of this year?
It's actually fairly quiet right now when it comes to the tech pipeline. We saw a lot of that get cleared after a slow year last year. We saw the likes of Cloudera, of Snap, of some of these smaller enterprise companies come out the door. I'm hearing from my sources, it's a lot of small enterprise companies, and that's what we'll be keeping an eye on for the rest of 2017.
All right, Alex Barinka, our Bloomberg News IPO reporter, thanks so much for weighing in. Coming up, it is prime time. Amazon's cargo planes are getting ready to support the company's annual day of deals for the first time. We'll bring you to the tech giant's home of Seattle next. This is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. A setback for Theresa May's and Britain's Conservative Party. The Prime Minister was forced to suspend one of her own lawmakers after she used, quote, offensive and racist language to describe the possibility of a no-deal Brexit. The Tory party's Anne-Marie Morris says her comments were unintentional and has apologized. Residents of Mosul are taking to the streets after Iraqi forces declared victory over Islamic State. But a few hundred militants remain in a small part of the city. Some 900,000 people were displaced from their homes during the battle to retake Iraq's second largest city. It launched in October. Protesters blocked the streets of Venezuela's capital city, Caracas, in the latest demonstration today against President Nicolas Maduro. That's after opposition leaders sounded the call Sunday for supporters to stop vehicle traffic for 10 hours. Sunday marked 100 days since the deadly protests started. Secretary of State Rex Tillerson is visiting Kuwait, Qatar, and Saudi Arabia over the next 4 days, testing ways to break an impasse that has persisted despite mediation efforts. Talks began late today to settle the crisis, damaging ties between several key U.S. partners. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti, and this is Bloomberg. It's just after 5:30 p.m. on a back-to-work Monday here in New York. Already 7:30 Tuesday morning in Sydney. We are joined by Bloomberg's Paul Allen with a look at the markets. Paul, good morning.
Good morning, Elisa. Not much of a lead there from Wall Street, so ASX futures looking flat right now, off by a single point, while over in Japan, Nikkei futures are mixed. Now, market open is going to be watched pretty closely in India today after a lot of disruption on Monday. Delayed the open until the afternoon with equities and derivatives trading frozen. Indonesia had its share of problems as well. About 30 minutes after opening on Monday, was shut down for almost half an hour as well before trade resumed. Quite a lot of data around today. China auto sales, we've got two industry bodies releasing numbers for both June and the first half. That's expected to see a reverse in recent declines in auto sales, with SUVs leading the way there. Here in Australia, we will have home loans data for the month of May, expected to show a 1.5% rise, reversing 3 months of declines. And that's even though house prices have been coming off the boil recently. We've also got business confidence numbers for June out of Australia. And in Singapore, the big one, Temasek Holdings, the state investment firm, that is likely to see a jump in assets on a stock rally and more private deals there as well. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. Amazon is gearing up for its third annual Prime Day, where items across the e-commerce site will go on sale for its 85 million Prime members. To get all those packages delivered, Amazon has its own fleet of planes to help with what's expected to be its biggest sales day ever. Earlier today, our Bloomberg editor-at-large, Corey Johnson, sat down with David Clark, Amazon's Senior Vice President of Worldwide Operations, and asked how we should understand Amazon's global fulfillment space.
Right now around the world, we have over 150 million square feet of fulfillment space, hundreds of thousands of employees. And when a customer places an order, we decide which fulfillment center it's going to come from. We try to ship from as close as we can to the customer, but when you have this vast selection that we carry with you over 50 million SKUs, many of them, there's only one or two of them. And so we have a 2-day promise in the U.S. And so if you're in New York and need a product and it's in the only place it is in Seattle or California, this is how you get it, through one of these cargo planes or through one of our partners.
Should we think, when I read the 10K, it talks about lease facilities, which is the majority of the fulfillment centers, and does that make any difference to you guys?
It really doesn't. It's just we think of these places are all largely custom designed with our engineering and fulfillment processes or sortation and transportation in mind, and it's just whichever financial vehicle we choose is the best way to move forward with the asset.
Now, how many planes have got this fancy paint job on?
Well, we've got 24 planes flying right now, headed to 40 in 2018.
And are they all festooned with Amazon?
I think there are 8 right now that do not. The first 8 that rolled out, we got in service quickly and did not put the design on. All the planes since have been.
I ask because I wonder what the advantage of that is.
Well, the advantage is we get to stand in front of it. And it looks really cool.
Absolutely.
If you have cool toys like this, you need to put your name on them, right?
I would imagine it helps you promote the brand constantly.
It does. It's fun to. It's amazing how many people pull into the airport. I find these pictures all the time, plane spotters and people traveling who find a Amazon plane on the tarmac, and just it's cool for customers and employees alike to see them flying around.
But here we are on Air Cargo Road here at SeaTac, and it's got to be a reminder to the other air cargo companies, the FedExes, the UPSs, and so on, that you guys are here and you've got options.
Well, I think if you go over to their places right now, you also see a lot of Amazon boxes in those places as well. We have a great group of carrier partners around the world. I expect that to continue. This is all about both innovating for customers and supplementing available capacity. But again, we have great partners, expect to continue to do so.
How much of this is going to be fulfillment center to fulfillment center movement of product?
Almost all of this is actually package transport. Now what we do is some of this is direct package transport, meaning instead of having to go through a hub, we know that we have a large portion of volume going from the West Coast to the East Coast. We can fly directly point to point, take a step out of the process, which allows us to make the cutoffs much later for customers. So on a 2-day order, you might have an initial 12 hours or so to order and still get your product because we can go directly from point to point instead of having to go through a hub.
So you might be at a Procter & Gamble facility in Ohio and realize you need to get to Phoenix and you don't have to fly it through Memphis as FedEx.
We could, or there's this one unique. You have a particular record player stylus that you need, and there's only one of them that we have, and it's in New York, and it needs to come to you in San Francisco. We'll put that on a plane, and instead of having to fly it to Cincinnati or Louisville or Memphis and connect and then go to San Francisco, we can put it on our plane from the East Coast directly to our San Francisco hub and get it to you, and you have much longer to order it instead of just going point to point.
Now, in terms of percentage domestic capacity, when you get to 40 planes, where will that be in terms of how much of the stuff that you're moving?
Yeah, we're not specifically stating what our breakdown is around our different carriers.
But is that how you guys are thinking about it?
Well, we think of it as more on what customer demand. Again, we start everything with the customer and work backwards. So, what portion of the customer demand is best suited to go through the paths or the arcs that we create to enable faster delivery, and that we work backwards from that.
And when you have negotiations with the carriers, and I'm not talking about financial negotiations, but sort of how they're going to service you or service the business of Amazon, which ultimately is to service your customer, do you have those kinds of discussions? Like, hey, we could really use a route that goes from point B to point D, and you don't have one like that?
Well, we have very strategic partnerships with all of our carriers. As you can imagine, in order to make the holiday work, in order to make our growth rates work, it's very important that we have a great relationship with them. And so we partner in almost every aspect of how the operations work with them in order to ensure we're aligned.
In terms of the plane business itself, it's a very complicated business. It involving leasing, as I shout over the planes as they fly above us, but involving leasing, involving a whole different finance things. Are there things about the Amazon balance sheet that make this, that give you advantages here that you might not, that other companies might not have?
Well, our focus really in the planes from the beginning has been all about the customer experience side of this. It's been all about enabling faster delivery and also enabling additional capacity for customers.
Right.
Our approach to structuring the arrangements, as you said, there's a lot of moving parts in the airplane business, and we found a couple of great partners, we think, in Atlas and ATSG, and we've worked with them to come up with a great path forward. We think that fits both the company needs, works great for them, and for the supplier, and provides a fantastic service to customers.
Now, was this a typical Amazon project that started off with a memo and said, hey, what if we tried this, throw it against the wall, see if it sticks?
It did. It actually started. We actually had somebody came to us and sort of pointed out that we hadn't realized exactly that we had this much scale in air. And when we looked at it, we said, this is right. We really could. And then it went exactly to what you just said. We went out, we wrote a 6-pager, we wrote a working backwards document for what would a prime air product for air cargo for Amazon customers look like, what would make it different, what would make it special for customers, what would enable sort of lower prices and faster delivery for customers, and ended up with this.
And you said scale. Is there a metric on that scale?
No, it's just about, as we continue to grow, that growth provides us options to new things that perhaps we couldn't do in the past. Could be something like Prime Now, our 1-hour delivery service. We had to reach a certain scale to where our logistics infrastructure and technology for both fulfillment and delivery enabled that 1-hour service. Same thing here. We needed enough volume where moving from coast to coast made both sort of utilization and financial sense to be able to provide that service for customers.
There's one last thing. Is the change in sort of Amazon's approach to local taxes, is that the thing that sort of propelled this whole business to get closer and closer physically to the customer?
I think we've always had the same approach, which is we follow all applicable laws, and we continue to spread across the U.S. And I don't think anything particular to tax had anything to do with this. This was really all about customers.
David Clark there, Amazon's Senior Vice President of Worldwide Operations, with our own Corey Johnson. And sticking with Amazon, the e-commerce giant is playing catch-up with brick-and-mortar store Best Buy, at least on one front. Over the last few months, Amazon has been quietly assembling what will be a competitor to Best Buy's Geek Squad. The new feature allows for gadget experts to offer free Alexa consultations as well as product installations for a fee inside customer homes. Best Buy plunged as much as 8.2%, the biggest intraday decline in more than a year. Coming up, he is an NBA champion and one of the most tech-savvy and well-connected in Silicon Valley players around. We are talking to Andre Iguodala of the Golden State Warriors next. This is Bloomberg. A stock we are watching, shares of NVIDIA rallied more than 4% in Monday trade. The chipmaker's price target was raised to $200 from $130 a share at Needham, which said its deal with Toyota will generate meaningful revenue over the next 24 months. In total, Needham sees the Toyota deal generating as much as $1.7 billion in sales. Well, Golden State Warriors' Andre Iguodala is a two-time NBA champion, former NBA Finals MVP, and an avid tech investor. In his 4 years with the Warriors, Iguodala has become one of the most tech-savvy and well-connected players in the game. He has built a reputation as a sharp Silicon Valley investor, got in early on Facebook, Netflix, and Tesla, and has built an admirable network of A-list VCs, CEOs, and Valley entrepreneurs, many of whom account for the billions of dollars in total net worth sitting courtside at every Bay Area game. Our Bloomberg editor-at-large, Corey Johnson, caught up with the Golden State superstar earlier today and asked if the tech aspect of Silicon Valley had an effect on him choosing to play for the Warriors. Take a listen.
People always ask me, how important was Silicon Valley in my decision to come to the Bay, and I would say it had a big influence, but the team was right on the cusp of some success that I don't think anyone else could see, and I guess that just having that tech vision, and like I said before, seeing what lies ahead and trying to read 5 years down the road kind of came into part as well. Knowing that the team was right there and I could be that key figure and to you know, when you go in that press conference after your signing, you say, you know, the goal is to win championships, and that's kind of a cliche thing to say, but for me, it was, you know, I always try to be honest. Sometimes I'm too honest, but that was a key factor, knowing that we had opportunities to compete for championships, and we've been to the finals 3 years in a row, and we have 3 out of the 4 years we've been to the finals and won 2 of them. So I guess that tech disruption thought process has worked out for me in basketball terms.
But how has Silicon Valley infected the way you think about playing ball or the team plays?
Well, like I said, when it comes to investing, you're basically betting on the future and what will happen in the future. You know, you bet on a company, you said it'll grow. You know, you want it to triple in size in a certain amount of time. You know, you look at growth projection, you know, you think about financials, and that's what you're pretty much betting on. And that was the same decision I made when it came to the basketball side of things.
Indeed. So in terms of investing stuff, you mentioned Walker & Company. I think it's Tristan Walker's company. I think it's an intriguing idea that it's curious to me that that's a Silicon Valley idea. Talk to me about that idea briefly, and sort of how you see that as a Silicon Valley idea itself.
Well, it's interesting how Tristan Walker came up with the idea, you know, and being African American, we both know how tough it is to get certain products just in a regular pharmacy or convenience store. You know, it's a small section of you know, health skincare products, and you look at the financial side of that and how much the urban community spends on health and skincare products is double of all the other categories combined, and we're underserved. So the idea was basically there. You know, you kind of just put those metrics together. You know, we always talk about analytics, and it's everywhere, not just basketball. And that's how you come up with this company, and that's how you see the growth, and that's where the vision comes from. And there's a company, Maven as well, there's similar in hair extensions, and how you can try to scale those to be global brands. And I think both are, you know, trending towards that.
Let me ask you finally about the Players Technology Summit, the thing you and Steph Curry are doing with Bloomberg. What are you trying to do there? Who are you trying to school, and what do you think you might learn from that experience?
I think we're trying to school both sides. You know, this is the first annual the Players Tech Summit, and we're going to have the top VCs, some business moguls as well. We're going to have the top athletes. You know, I did something similar with the NBA Players Association last year. It was just basketball players, and we saw the reach that NBA players have on a global scale, being, you know, the #1 sport globally, and I think China has played a huge influence on that as well. And I think players' brands and endorsements are changing. You know, you have to change that template that, you know, agencies have been doing for so long, and it's kind of becoming outdated. And you see the players' reach are actually exceeding some of the companies' reach. You know, you talk about certain guys having, you know, 8, 9, 10 million followers on social networks, and you see some companies who don't even have half that.
Maybe it's not all about the next sneaker deal.
Right. So you talk about ownership, you talk about equity, and you talk about how do you scale that? How do you scale a player's reach? And there's a lot of conversation to be had on both sides. The players can learn from, you know, a lot of VCs and tech companies, and the tech companies can learn from the players. So you get us all in a room, you get the top from both sides, and you know, there's so much that can be learned and can be turned into something that there's never been seen before, as far as how do we maximize the reach of the two sides combined. It's kind of like you talk about analytics and the feel of the game, and how do you combine those two is similar to that.
Andre Iguodala of the Golden State Warriors there with Corey Johnson. Coming up, Stripe just inked a deal with 2 major payments players in China, what the move means for its ambitious international expansion efforts next. And check it out at TV Go, our new interactive TV function. You can find it on the Bloomberg and watch us live. If you miss an interview, you can go back to it. You can send our producers a message. You can play along with the charts that we bring you on air. This is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg. Facebook is slashing the price of its VR headset for the second time this year. Oculus Rift will now be priced at $200, a far cry from the introductory $600 price tag from just a year ago. The move is a sign of continued competition in virtual reality. Analysts at the gaming market research firm Superdata estimated the Oculus Rift has sold about 240,000 units through the beginning of February. That's well behind sales estimates for both the PlayStation VR and the HTC Vive. Stripe is betting big on China. The payment enabler unveiled a partnership deal with two of China's biggest digital payment services, Alipay and WeChat. The two dominate the mobile payments market in China with a combined 90% share. This move gives the San Francisco-based startup access to hundreds of millions of Chinese customers. Joining us now to discuss, our Bloomberg Tech reporter Selena Wang from New York. So, Selena, how much new business does this mean for Stripe?
This is a big deal for Stripe and really setting their global footprint here. So WeChat and Alipay completely dominate the Chinese market for mobile payments, have more than 90% of the market. And this is really a way for Stripe to reach consumers that were previously very hard to get. Most Chinese consumers are in one of these wallets, and now they can access the thousands of businesses that transact through Stripe. And this is a great deal for Stripe because more business for its merchants means more revenue for them, since they get revenue by taking a cut of the transactions on their platform.
So, Selena, Stripe has made inroads into China before. What's different now?
So they had inked a deal with Alipay, but that was a more surface level one. It was just for merchants in the U.S. Now this just really expands the total addressable market. It really deepens Stripe's partnership with Alipay and with WeChat Pay as well. And now they have made other inroads into Asia before. They set up a hub in Singapore, in Japan, and just today, in conjunction with this announcement, they've said that they've rolled out in Hong Kong, offering their services to local Hong Kong businesses. So this is part of its much broader Asia and emerging market expansion strategy.
What does this mean for Ant Financial, of which Alipay is a part? What does this mean for their global ambitions, as well as Tencent, which owns WeChat?
This really fits into everything that Ant Financial has been doing thus far. They've really been doubling down on their North American strategy. Ant Financial is in the works to acquire MoneyGram, which is a money transfer firm based in the U.S. Ant Financial also recently inked a deal with First Data, which allows Chinese consumers to access the millions of small businesses that use First Data for brick and mortar processing. So they're really trying to reach the Chinese consumer wherever they go, whether that's online and they want to reach foreign merchants, whether that's offline and they're traveling abroad and they want to be able to buy goods easily with their mobile payments wallet. Now, Tencent, of course, also has a very similar strategy, wanting to follow that Chinese consumer wherever they go, online or offline.
We've talked about Tencent's global ambitions and whether WeChat could become a truly global platform. Is this a step in that direction or no?
I think this really just continues along their path of broadening it for the Chinese consumer. This isn't Tencent trying to reach the U.S. consumer. It's Tencent trying to make life better and more valuable for the people already on its platform. People do everything on WeChat, from booking movie tickets, doing some of their finances, doing peer-to-peer payments, as well as shopping. And by getting players like Stripe and all of their merchants onto the platform, it just makes it all the more valuable for Tencent's users to just stay within that WeChat platform. And as we know, WeChat and Alipay have a pretty intense competition going on right now in China, so they're both trying to do everything they can to make their platform more valuable.
All right, our Bloomberg technology reporter Selena Wang. Thank you, Selena, as always, for joining us. And that does it for this edition of Bloomberg Technology. Our special coverage of the Focus on Tech Week continues Tuesday. We will be joined by former Twitter CEO Dick Costolo. And Bloomberg Tech is live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. This is Bloomberg.